We are live. Welcome to the Portfolio Builder webinar update. We made a trade alert, which I'll cover today. The high risk portfolio is now up 927% in 4 years, outperforming the S&P 500 by 1,456%. High risk trade alert, your FNGA converted into cash at $399.40. So we got most of that jump. These guys keep changing tickers, making it a pain in the butt. So we did miss some of that rally, unfortunately. But you had 3 shares per unit, which gave you $1,300 and some change, which we're putting all into TMF. That's your leveraged TLT play. So 5-year bear market in bonds. Trump is getting ready to pass a huge tax decrease and increase the debt ceiling by $4 trillion. Passed the House last night. I think the Senate's going to probably send it back to the House with revisions, and they'll get it passed probably late June, early August before they go into recess. So that should give us a nice bounce. There's also a lot of rebalancing in big pension funds and all sorts of reasons why I think the TLT will give us a quick bounce. And then again, the situation just looks really bad for bonds until Japan intervenes into the bond market, or the US, probably Japan first, then the US later, depending on how this all plays out. What it looks like, the grand scheme is for the US here is to rattle the world, break down emerging markets, and force investors into US treasuries one way or another. They've got $5 trillion to roll over before the end of this second quarter, I believe, and then another $4 trillion at the end of the year. After that, it drops down to 2 to 1 trillion to roll over per year. Becomes a lot more manageable. Safe Growth portfolio is doing great. No changes there. Okay, so Bitcoin hit a new high. Test. Okay, sorry. I'll repeat that. What was the last thing we heard, guys? Sorry. Well, long story short, I believe the spending bill will be rejected by the Senate, revised it back to the House, go back to the Senate. In that moment, we should get a big bounce on the TLT exit, and then we're going to put a lot more risk on the portfolio here, because we're looking at $4 trillion in tax cuts and increasing the debt ceiling by $4 trillion. So it's really not a pretty picture for bonds, even though we're in a 5-year bear market and we're looking at interest rates not seen in decades. Bitcoin hit a new high several times over the last 24 hours. And again, the perpetual funding rates are very low, which would usually indicate a top, as you can see in this chart. That's the daily or maybe even the hourly tomorrow, and to be aggressive in crypto, not search volume and Google pop up. So looking good. Looks like Bitcoin is ready to pump higher. And it's quite surprising. I wouldn't usually expect Bitcoin to rip higher as the bond market implodes on itself in Japan and US. But here we are. Here's the search interest for Bitcoin. As you can see, retail is not looking at it. Just a funny little napkin. Sell cash, buy Bitcoin. Okay, this has been amazingly accurate, and it's looking at M2 growth. This pushes us to a new high in August and is predicting around 150 to 180,000 Bitcoin. So really excited about that. Of course, there's things that can go wrong in between then. And this is without Japan or US expanding M2. US is still reducing M2 by doing quantitative tightening. So add some rate cuts, some yield curve control. This could extend into the year end. Okay, big beautiful bill passed the House. Again, I don't think the Senate's going to pass it. Likely, and again, that's probably going to be because these interest rates are so high, especially on the long end. So I think it will get sent back and then go back to the Senate. So this should give us a big bounce on the TLT to exit and look for some good plays. This is the CBO's estimate of the House bill, and deficits are roaring again. So fiscal responsibility is out the door. Looks like Doge really got shut down by the courts and really wasn't able to do much. Here's the daily cumulative government spending, and you can see it just, this train doesn't stop, and that's what we like for Bitcoin. Bitcoin, if you looked at it as a currency, is now the 8th largest market cap, just under the Hong Kong dollar, the Korean won, the British pound, Japanese yen, euro, US, and then the Chinese yuan. Here's interest rates. You can see we're at new highs since 2010. I think you have to go, I'd have to look back several decades to get to interest rates this level. Lynn Alden says the bond market is starting to realize that nothing stops this train. Nick Timiraos, who's known as basically someone who leaks stuff the Fed wants people to read. What we're learning is that there will be no material fiscal consolidation. The US will continue to run extremely large deficits as far as the eye can see. High risk portfolio allocation. Okay, so I fixed this. There's no FNGB or FNGA. We're loaded up on some treasuries. Again, unless the Federal Reserve and Japan start forcing yields lower with rate cuts or yield curve control, not a great long-term play in the moment. In the short term, it's extremely overbought, very cheap. I think we make a quick buck on that and then rotate into risk assets. Coinbase made it into the S&P 500. It's been doing extremely well. I look at it as a very safe company with a monopoly in the US. And again, I hate MicroStrategy, but we'll probably throw some leverage MicroStrategy. And now there's a bunch of rip-off plays, like in Japan, MetaPlanet. There's just a bunch coming in. So when I do my next trade alert, probably a lot of little plays in there. So the offense will probably expand to 10 to 20 individual stocks or ETNs. But again, just looking for potential little dip. I do think we are ready for some sort of mini pullback on stocks and a boost on the TLT to make that play. We're still down 20% on the year, but posted a 13.4% return so far in May. And again, very confident we can hit a double or triple digit gain for high risk this year. Just being very patient as we see this all play out. Obviously, I miscalculated the intensity and timing of tariffs this year. Otherwise, we wouldn't have had such a drawdown. But I do think a lot of that is behind us. With that said, all the trade deals are evaporating. In 90 days' time, which is about when I think the spending bill will pass, is when a lot of the truce with China ends. So we got a little time for them to play around with things, get the budget passed, and then see if we can make a deal with China. So we'll be keeping a close eye on that as well. Safe growth portfolio allocation. Pretty much all in on IBIT, so just cleaning up with that super safe play. EDC is emerging markets, low play there. If you look at Stanley Druckenmiller, one of my favorite investors of all time, who hit NVIDIA early, he's loading up heavily. His biggest single position outside of ETFs is now in Alibaba. We got good exposure to that. But again, the US strategy here is to wreck emerging markets and force them to buy our debt this year. So we'll see how this plays out. No change to the portfolio on safe growth. And we're sitting at a 8.6% return in 2025. We'll probably get heavier on treasuries later in the year for that portfolio. Okay, some charts. Here's your 2-year. So it's still trading 50 basis points below the federal funds rate. So it's at 4.5. This is at 4, indicating we have 2 rate cuts ahead. I think July will be the earliest. Bad news is even though we went below the 2% inflation target with true inflation, which is way ahead of the Fed's data, it's starting to come back up. So again, they tricked the whole world last time Trump was in, lots of tariff hysteria. What happens is everybody goes and mass orders everything in an attempt to front run massive tariffs, and then they drop the tariffs. So likely everybody's going to unload a whole bunch of stuff that they hoarded at super cheap prices and push that inflation print down. The situation with Russia looks like Putin thinks he's going to win, so he's not making a deal, and Israel's getting ready to blow up stuff in Iran. So that part of the inflation picture is not great. We'll see how that plays out in the coming weeks. 30-year does not like the supply side on the debt. I don't think this is an inflation story. It's just too much debt. So we're seeing these yields just go parabolic to the upside. So we're buying the dip finally. I do think we're probably topping out that interest rate before it would either break things and force yields lower, which the thing to break would be stocks, or we get Japan to come and intervene. Towards the end of these slides, I have the Japanese bond market, which again, Japan's only job in the whole world is to protect the carry trade, which finances the entire financial system. So I think Japan will step in soon. I think they have a meeting in about 20 days, June 12th or so, to decide what they're going to do. They've already told us that they're not going to hike rates anymore, but what they need to do is yield curve control. The problem with that is it makes their Japanese yen crash, which is already hurting the internal economy. So either way they go, there's pain to be had. Here's DXY, just been trading in the 100 range all of the past month. But again, you can see it's crashed from as high as 108 at the top of 2025. Here's TLT hitting a low over the last 12 months. And again, we're buying the dip with leverage on TMF. S&P 500 getting ready to break into new highs. I do think that's going to come again, as soon as we fix the bond market problem and pass the massive new spending bill. NASDAQ, same chart, UVXY. At some point, I'd like to add some of this back into the mix, but again, I think we're probably going to crush it lower over the next 3 months. So we're going to be careful with that. Here's IBIT screaming higher. This is the biggest position for the Safe Growth portfolio. We're using Coinbase. Think of Coinbase as like an altcoin relative to IBIT. And then I would think of MicroStrategy like a meme coin, something like Fartcoin or something of that nature. So they can go parabolic. It's got the mania. And then again, MicroStrategy is a proxy play for a lot of pension funds. And it's actually, its biggest holders are actually sovereign wealth funds. So people are buying Bitcoin at 3 times its value when they buy MicroStrategy, and they don't care. Here's Coinbase's chart. Again, I think they're getting ready to rip higher. Unfortunately, they lost 1% of their customer data via overseas support agents. Now, at first, that may not seem like a big deal, but it has the home residence address. So there could literally be people getting kidnapped and killed for ransom to get access to their portfolios. So this could be a little more of an impact than we see in the stock chart so far. So watching that closely. And also, we had a big jump when it entered the S&P 500. So probably the high risk will look for alternatives to Coinbase in the near future. Tesla is looking great. Elon's left the Doge, back to Tesla. They've got automated robots coming soon and robo-taxis. So I think that's going to really drive profits up. I look to hold Tesla for a considerable amount of time from here. Semiconductors started off really hot when we entered, cooling off a little bit, but again, probably will add to this in the near future. This is very odd because we've had oil rising with all these new headlines and ERX hasn't. So I think that's quite a disconnect. May add to that in the near future for both portfolios. EDC, again, that's emerging markets times 3, safe growth play. Some big names are loading up on that. Not only Stanley Druckenmiller, Ray Dalio, Michael Burry. A lot of these people are looking for the big U.S. switch to emerging market play that we've seen play out a few times in history, not very often. Russell 2000 is not anywhere near breaking to a new high. And again, this is the key index that a lot of these gurus and big hedge funds look at to determine if they think the bull market can last. We'd really like to see this pump. And I could see us getting into some plays relative to that in the near future, as well as they're trading at a discount relative to the big tech companies and the big banks leading the S&P 500 and NASDAQ. Regional banks looking fine. We look at that for stress only. No interest in investing there. Here's the Japanese yen against the dollar. And again, it's just a balancing act. My best guess is they protect the yen carry trade over the local currency. Here's Brent, a little bit of a bounce here from the low in April. And again, if we start blowing up facilities in Iran and Russia, which I think enrolled another 640,000 troops to the front lines in the last 2 weeks, if that gets more aggressive, we could see a spike in oil. So we'll keep a close eye on that. And again, ERX would be our play for that. Copper's a good measure of inflation, starting to rise again. So like I said, we are seeing inflation signs starting to pick back up. I think that's primarily, once again, from everyone freaking out about 128, 144% tariffs from China, which was a big joke, caused them all to mass stockpile goods. And now likely they're going to drop them because it's not popular. It's not working. So these companies are going to have to flood this into the market at low prices. So that's a good potential massive inflationary drop there. Gold market does not like the deficit situation globally, and gold's now becoming an alternative asset to bonds for central banks. China's hoarding gold, so we'll see how this plays out. Bitcoin has had a tendency to lag gold, and again, if that's any sign, Bitcoin's going way higher from here. Here's the Japanese bond. So right now we got US yields and Japanese yields going up in tandem, which is good for the carry trade, except for the currency crashing. So I think that we're going to have to see both countries forcibly stop yields from rising in the near term. So we'll see how that plays out, but that would be extremely bullish for cryptocurrency over everything. Okay, that's our update for the week. Lots happened. And what's the saying? Some decades nothing happens, and in some weeks decades happen. So that might be the type of regime shift we're experiencing this year. I'll go ahead and take Q&A now. Okay, great, guys. Well, email any questions in. We will do another webinar next Thursday. Okay, we got a question from Rich. Yeah, so we'll look at, I got a bunch of plays I'm looking at. So we'll probably look at some rip-off micro strategies. We'll probably do a leveraged MSTX play. And again, I look at those as meme coins, not a serious investment, so it'll be very short term. I'm not sure the timing on that. It could be weeks, months, days before we, if we get a big pop on the TLT, we'll sell it and rotate. But I also have some plays I've been researching all over the board. So what I've done is looked at the top gaining stocks, Palantir, Tesla, Nvidia, uh, and I'm looking at who they're partnering with that are micro cap that we can get in on early, because I think those trends will continue. Looking at some quantum computing stuff. So yeah, those are some of the hot plays coming for us. So expect a lot of micro cap plays on the offensive side soon. Yao Sun is asking if I think oil will go up. Yeah, I think there's a good chance oil will go back up. But I would expect that to happen as the spending bill passes. And I don't think it's going to pass the Senate until late June, early August. So we'll likely be making a lot of trades in late June or early August. Okay, guys, any other questions? We will be back. We'll be doing weekly ones until we get these trades through, because a lot's going on really quickly right now. Okay, great. Well, thank you guys so much for your time. We'll see you back next week, same place, same time.